Turkey's central bank delivered a large interest rate hike on Thursday, signaling a shift toward more conventional economic policies to counter sky-high inflation following criticism that President Erdogan's approach has made a cost of living crisis worse.
The size of the rate hike was not expected, although the direction was expected, because after Mehmet Şimşek was appointed, when he mentioned that there is nothing but to return to rationality, there's going to be transparency and consistency, we assumed that turn to rationality implied a turn to orthodox policies. And with a 40% inflation, if you want to implement orthodox policies, what you have to do is tight monetary policy.
The bank raised its key rate by 6.5 percentage points, boosting it to 15%. The increase, a significant jump from the current 8.5%, is the first since March 2021 and comes after Erdogan appointed two internationally respected officials to head the bank and the finance ministry.
So in order to offset these pressures, first you have to offer an interest rate that is positive enough in real terms to discourage people from consuming, so they will either save, they will put their money in a bank account, or they will think of the loan rate that they get from the banking sector that is high enough to discourage them from getting a loan. Either way, consumption slows down, and then inflation expectations start coming down. But today's decision still leaves us with a significantly negative real interest rate. So I doubt this level of interest rate is going to be sufficient to discourage people from consumption. And as a result, I think it is rather insufficient to consider a serious disinflation program in Turkey.
The rate hike is an indication that the country is moving away from Erdogan's unorthodox belief that lowering interest rates fights inflation.
But I think with the current interest rate, which is not going to be sufficient to generate significant inflow of capital, so reserve supply probably is not going to increase enough to offset pressures on Turkish lira. And I expect the continuation of central banks' implicit interventions to the currency market. Yet, because the net reserves are negative, there isn't unlimited resources to inject money as we did before. So most likely, depreciation in Turkish lira is going to continue following this rate hike, but the pace will be determined by central banks' implicit interventions, as well as the signals about future rate hikes.
Traditional economic theory says just the opposite, and central banks around the world have been rapidly raising rates to combat spikes in consumer prices.